Here we go with our final update on the trading day here on a Friday. Remember, the markets will be closing at the top of the hour. They do not go till 1:15 like they normally do. They're wrapping up around noon in Chicago, so the traders can go home. It's pretty thinly attended, from what I understand, on the trading floor today anyway. A lot of traders just make it a long holiday when they have Thanksgiving, of course, on Thursday like it is. So let's take a look at our current trade this morning. We had some export sales announced, and the corn didn't benefit at all. We have December corn down 2 1/4 now at 359 1/2. It's on the low of the day. March down 1 3/4 at 371, only one tick from its low of the day. And if you look at the soybean trade, currently you have January 2 1/4 lower at 880 3/4, and you have March down 2 1/4 at 894 1/2 per bushel. Let's go to the trading floor in Chicago and find out just what's going on, and we'll talk directly with one of the traders there. We have Scott Gecas standing by from Longleaf Trading. Scott, it's like in the corn and soybean trade, it's like the traders ate too much turkey yesterday. What's going on?
Yeah, it's pretty slow all the way across the board. The biggest story today is just going to be oil. Oil's definitely taken over all the headlines. Everyone's focusing on oil. Oil is one of those biggest factors that is bringing corn down, as well as the strong U.S. dollar. So we're going to keep an eye on that. That correlation is starting to come into effect a little bit more than normal. So we're going to see what's really going to happen with that.
We have had over a $4 swing in the price of that crude oil from the high to the low today, still well over $3 lower, although it has come off of its earlier low this morning. But definitely something to watch, as it does have an impact on the ethanol market as well. And corn, you're exactly right. Now, the wheat market has had some firmness early today. We heard that Egypt bought quite an amount of wheat from the U.S. yesterday. That hasn't happened in quite a while. We also had Tunisia buying some wheat this morning, but all of the early strength here in the wheat market is kind of flamed out now. The December Chicago wheat back to $5 even. That's only a penny and a quarter higher. It had been as high as 507 1/2 earlier. The new crop July is actually lower on the day by 3/4 cent right now. Meanwhile, if you look at Kansas City wheat, here you go with December now trading 4 1/2 lower at 464 1/2, and July down 4 at 512 1/2. Scott, this Kansas City wheat has been making new contract lows as it goes. It looked like maybe it had found support this morning, but now is this new contract low territory once again?
It kind of looks that way. Now, it's really surprising that the Kansas City wheat is at these levels. You know, we still have tightening global supply. The Russians are slowing their exports. You know, the demand for U.S. wheat is definitely starting to show up, and that was confirmed with the Egyptian tender. So, you know, we're going to stay bullish above that 500 level. The fact that it spiked above, we had that fresh buying. I think that's more of just an intraday profit-taking aspect, you know, selling off as hard as we have been, but we're going to see how next week is going to shape up.
Okay, behind you on the trading floor, is it as thin as what I'm hearing for the attendance down there? It does sound kind of quiet.
Oh, yeah, for sure. The only thing that, like I said, the only thing that's anybody's focusing on today is oil. You see the traders come in, usually on a shorted day like this. They come in for the open. That's when you're going to see the biggest volume. And then all the traders here on the floor tend to taper off, you know, anywhere between, you know, U.S. Stock market open till roughly around 10 o'clock. So it's very thin down here.
And you'll probably be the last man standing. All right, Scott, we'll come back in a moment, and we'll talk about our livestock trade today. That's been fairly exciting. We'll talk about that in just a moment. Our guest right now, Scott Gecas, and he is with Longleaf Trading in Chicago. He rejoins us to talk about our livestock trade. A little bit ago, Scott, we got new updates from USDA for our wholesale beef and pork trade. And it seems like, you know, for quite a while, the wholesale trade has kind of been on the skids. But as we look at our new numbers on the beef side here, we have a firmer tone here this morning. So on the choice cuts, I see where we are up 22 cents this morning. We're priced at $213.91 per hundredweight. And if you look at the select cuts, we're now up 67. We're trading at $198.93 per hundredweight. Now, if we look at the pork side of things for the wholesale pork trade, carcass values gained about 17 cents this morning. They're priced at $67.14. Loin value down 17 cents, though, at $63.97. And we have the ham market dropping 44 cents at $49.63. The belly market came up about $3.55, right at 108 even per hundredweight. On the futures trade, Scott, we have the cattle market. It has been firming up as we go today. We have the December live cattle up 65 now at 117.05. In February, just a dime higher at 120.85. So now we're kind of settling down a little bit here. On the feeder cattle trade, let's start with that January contract, which is now 68 higher. We're at 149.30, and March up 82 at 146 even, while on the lean hog trade, here you have your December 77 higher, and look at February, where the most volume is. We're now $2 higher at 68.17. So quite a comeback here in the hog market as we wrap up the week. Technically, on the charts, I was looking at the cattle charts. They look to be in pretty solid territory, don't they?
Cattle above 117, obviously, that's a little bit of ways from where we're at. But, the cattle on feed report, as well as the placements, they came in well below estimates. So we're going to keep an eye on that, see how that's going to take moving forward. Still have that short-term supply concerns. Demand is firming up, as you can see with the market action today.
How is that possible, though, when, the traditional thinking is when you have the equity markets diving like they have been recently, a lot of times they think that there is a less disposable income on the part of the consumer, and that hurts the meat trade.
Right, and that's been the story pretty much all year. So the correlations and theory have been completely thrown out the window this year, especially when you're looking at the markets being at all-time highs. Any kind of pullback, flight to safety, flight quality usually goes to the metals. Everything's going to the U.S. dollar. So, all the correlations, all the theory, it's pretty much all over the market today.
Okay, well, thanks for weighing in on the market activity as we wrap up the week. And if you don't mind, I'll invite you back. We'll talk a little bit on the evening news tonight as well. Scott Gecas, he is with Longleaf Trading, and he's there at the edge of the trading floor in Chicago doing yeoman's duty for us today when it's kind of quiet behind him.
He is, and getting quieter, too, as we get closer. All right. Thank you very much, gentlemen.